Hello, everybody, and welcome to this awesome webinar that myself and the Skubana team, along with Berg Advisors, has put together. 7 accounting mistakes that can hurt your business. We'll go through who's going to be on today, but some logistics first. We want this to be really interactive. So I see a lot of familiar faces and names in the chat. Please ask questions, say hello. Let us know where you're dialing in from. I am dialing in from Nyack, New York. So it's about 50 minutes north of the city. And I'm just grateful that a lot of those that have joined are taking time out of their day to join this webinar. I think it's gonna be fun. I wanna make sure it's informative and making sure you're getting a ton of value. And that's really our promise, is delivering value. So if you have questions, please put them in the question area. If you just wanna chat and say, what's up, just please chat away and say hello. Again, this is meant to be interactive, not talking at you, but talking with you. We do have some poll questions that you can answer in real time. You'll be able to see the results on the webinar. And we have a really fun bonus at the end. I don't want you to miss it. A lot of those that are joining today are Skubana customers. And so therefore, you're gonna benefit greatly from what we're gonna share momentarily. So stick around for the end. So we have a great panel today. I'm just going to introduce myself. For those that don't know who I am, I'm Chad Rubin, founder, co-founder, and CEO of Skubana. Joining me, colleague Samantha Potter. Please introduce yourself.
Hi, everybody. So some of you know me already, since I work with a lot of the accounts that we handle at Skubana. Basically, I help businesses with their workflows as they relate to Skubana. So I'll be explaining how the connector works a bit later in this presentation.
Yep, and so Samantha is a massive help. She's really a lot of our brands. She's taken on a lot of the, I would say, the elevator, or maybe very, very VIP clients at Skubana. She manages a lot of those. And alongside us today, I brought on Andrew Berg. And before Andrew gives his introduction, it's important to understand that Andrew actually does all of my books across the businesses that I own, across my personal taxes, and actually has saved my business from an e-commerce perspective. And we'll share more about that later. But Andrew, please, if you don't mind sharing some of your background as well.
Hi, I'm Andrew Berg. I am calling in from Lafayette Hill, Pennsylvania, which is about 5 miles outside of Philadelphia. My firm is actually outside of Philadelphia as well, in Villanova, Pennsylvania. Founded in 2011, been a CPA partner of different firms since 1997, in and out of private and public accounting. I helped Intuit, help them build the QBO software that most of us are using today. So I was part of their council to help them make the software better. We work with a lot of e-commerce clients, mostly businesses between $1 and $20 million in revenue. And Chad is correct. We handle all of Chad's work, and we are also the outside CPA firm and accountants for Skubana.
Cool, awesome. So this is gonna be really informative. I want this to be transparent, like a transparent expose on some of the mistakes that I've made in e-commerce. For those that don't know, before Skubana, running and automating e-commerce business called Think Crucial. I see Think Crucial's on the line also. Kristen, who actually runs that business and spearheads it, has joined today, but has really done some big things to change up the way we do our accounting. And hopefully we'll talk about some of those mistakes that I've made and prevent the hair loss that's under this hat, with our old logo, by the way, today. So without further ado, why don't we get into it? The what you'll learn slide is here. I just want to set the right expectations. So we're going to talk about mistakes that I've made, mistakes that other e-commerce brands have made, best practices on reconciliation. A lot of this is geared around e-commerce, even though Andrew Berg does do my software side of things. This is really focused on e-commerce mistakes for those that want to just see those mistakes and not make those same ones. A lot of it is, at the end of it, by the way, Samantha is going to really talk about what we've launched with our QuickBooks integration and how you can automate a lot of that using the integration that we built. So why don't we start on the first one? So everyone, if you can buckle up. Again, we want you to ask questions. So there is the chat. It's active. I see people from Philadelphia, Michigan, New York, North Carolina, and shout out to Philly. Which I believe, Andrew, that's where you live or where you're from.
Correct.
All right. So first one is using the wrong accounting method. And actually, when you took over Skubana, Crucial's books, we were using cash basis. And if you can just talk about what you've done there and what you're seeing, those mistakes, and how you can, why people should be using accrual, et cetera.
Mm-hmm. Yeah, so everybody heard this fancy word, accrual accounting. Everybody knows it's cash accounting. Basically, those are not ways of doing business. Those are ways of accounting for how you did business. So if you use a credit card, you are running an accrual business. If you ask a vendor to give you a bill for something that you purchased, you're running accrual business. If you collect money from a customer that for a service that you're going to provide them in the future, that is accrual. Everything really comes down to how it's recorded in your accounting software, not how you run your business. Most people who start the business start on a cash basis. They start very small, transaction in, transaction out, and you're basically recording everything as what you spend, when you spent it, and when you collected it, and not have to worry about when the actual transaction occurred. So knowing the difference between cash and accrual is extremely important, especially when businesses start to get much bigger. You know, when you're running one SKU versus 50 SKUs or hundreds of SKUs, this process of how you account starts to get a lot more important. Everybody knows especially in a product-based business, multi-channel e-commerce businesses, cash flow is always a challenge. Not having cash, not knowing when to choose to use cash, not knowing strategically when to spend cash. So
I think that's a good segue, by the way, into cash flow. I think you were going to say something else there, Andrew.
Yeah, absolutely. So what we do is this is an example on the screen. It's not it's a kind of a blurry example, but what we do is we take care of all of our clients' books on an accrual basis, because to us, that's the best way for us to determine the true performance of the business. But most of my clients always say, hey, I had this profit. Where's all my money? So we develop a what happened to the cash report. And basically what happened in the cash report does, it takes the accrual-based profit, transitions it to a cash-based profit, and then gives us a working tablet to talk to a client about where all their money went. And it reconciles directly to the change in the cash from the beginning of the period to the end of the period. So the example you see in front of you here basically is showing a detailed example of everything that occurred in that period. And then in a gray box in the bottom is what we share with our clients at a management level, which is, hey, let's summarize what happened this period from cash to accrual basis.
And what are some of those between that transition of accrual to cash? Like, what are some of those things that go into the report? By the way, this report is a game changer. I suggest anyone who's on the call today have their accountant or talk to Berg about how they've generated this report. It's really incredible.
Yeah. So in any business, the three biggest items that create an accrual-based business are accounts receivable, accounts payable, and inventory. In an e-commerce business, the biggest item is inventory. It is the biggest challenge that I have working with any e-commerce business, is determining what the true valuation of inventory is, knowing when to actually value it, making sure it's closed at a certain period, because that triggers all kinds of conversations about margins in your books, obviously profitability. So some of the items that go into this report in determining accrual versus cash are, like I said, inventory, AR, AP change, accounts payable, accounts receivable change. It could be credit card change, because our credit card balances are paid at different periods than when we actually use the credit card. Deferred revenue is another one. That would be an item that would be accrual versus cash as well. So what we do is we extract all those things that hit your P&L that were accrual basis in order to be able to talk about everything on a cash basis instead of a accrual basis, which is really hard to understand. Just to segue one more thing. We then want to make sure people understand that there's a lot of cash flow items that don't appear on your profit and loss at all. They appear on your balance sheet. So most people lose track of that too. So if you're paying back principal in a long-term debt, that's cash flow out without it appearing on the P&L. If you're paying down accounts payable balances, that's cash out without having affected your profit and loss balance, your profit and loss report. So that's where that report that we create is so important to help the owners understand what's going on.
That's great. So the third mistake get into is in-limbo inventory. And you can get into the details on it, but really it comes down to what's coming in on the ocean or air, along with even in transit inventory that's going to Amazon's distribution centers.
Mm-hmm. Yeah, so one of the big things we see when we talk about valuing inventory isn't just what the valuation of the inventory that comes from either spreadsheets that people are handling, or in some cases, Skubana is managing that inventory valuation. So one of the big pieces that is missing is, what do you do when inventory is in transit? So you put a deposit down on inventory and the inventory is on the water. So that money that is in deposit isn't actually a P&L profit and loss item. It's a balance sheet item for inventory that's on its way. But that inventory isn't valued until it lands in the US and makes its way to your 3PL. So before that, it sits on as a deposit for the cash that you put out. Once it arrives, it goes in your inventory. But there are multiple times that inventory is in transit that could get quote unquote lost. Think about it if you transition inventory from your 3PL to Amazon. So your 3PL more than likely will remove it from their inventory once they say it was sent to Amazon. But Amazon won't pick it up until Amazon actually receives it. So there is a report within Amazon that you can use to keep track of that inventory and then value it properly. And most people would think, it's probably not that big. Depending on the time of the season and the size of your inventory, that number could be significant. Hundreds of thousands of dollars of inventory in transit not showing on the books at a specific point in time because it's in transit.
Yeah, something I'd like to add to that, our inventory value report that we have in the Skubana analytics module actually includes in transit units. And I know from some of the companies that we work with that Amazon won't necessarily receive product for weeks, sometimes months. So it's just unaccounted for otherwise. So luckily in our report, we have that information, which I think is exactly to your point, what needs to be accounted for.
And that's great, Sam. The real question is, somebody has to take that report and then make sure that it makes it onto the client's books. And if it doesn't ever make it into the books, I think the key here is that you have an accrual-based books that's missing potentially a very large number.
Right.
All right, moving on here. Mistake number 4, really the 3PL fees of when they've been incurred versus assessed and invoiced. I know that, Andrew, you've spent a ton of time analyzing that with our 3PL. If you can just talk more about it.
Yeah, sure. Yours and pretty much every other client that we work with. So every 3PL is different. Obviously, they use different software to manage their businesses, and the challenge of figuring out how they use their software is one piece of it. Obviously, then integrating it to Skubana is a challenge in itself. But I think one of the things that we found is, first of all, the 3PL generally has 2 ways of billing. They will bill you for the month that they are operating in for storage, usually bins that you are going to be taking up for your inventory is billed in the month that it actually occurs. But then when the month ends, they will send you a bill after the month's over for the shipping and the pick, pack, and shipping costs associated with orders that went out the door. That number that is billed in a future month actually is an accrual-based item that should be reported on the prior month's books, so it matches up with the sales that went out the door. A lot of people will miss that and miss that 3PL invoice. And then the last piece, which Chad will probably be able to jump in and tell you, is a lot of times we'll kind of say, hey, is your 3PL auditing your inventory? You know, when I was growing up and I was a little accountant way back when, we used to count inventory once a month at a lot of our clients. That doesn't happen anymore because a lot of times the inventory is in Amazon or a 3PL. So we've challenged our 3PLs to go back and say, hey, we need to shut down an account and or a cycle count to verify our inventory value matches what our reports say.
Yeah, and that's something actually we did at Think Crucial. It was painful, and we had an assumption that the inventory was off, and it indeed was off. They hadn't done their cycle counts. I think it was like 5 years since they had done a cycle count, and so we shut down operation and let them do it.
Mm-hmm. Yep, and then we recorded obsolescence, inventory that didn't exist any longer, inventory. I mean, it was literally came down to a SKU by SKU item count to determine exactly what happened, what occurred within the 3PL. And by the way, the same thing happens with Amazon. And unfortunately, none of us can go walk into an Amazon warehouse and audit the inventory.
There are softwares, though, that can audit and make sure that you're being reimbursed for damage or lost inventory. If you want an intro to someone who does that, hit me up. It can recover a ton of lost money for you. My personal email, which you'll get at the end, is chad@skubana.com. The other thing I just wanted to point out while we're talking about 3PLs is we initially were using our 3PLs shipping rates. And one of the things that we did earlier this year was we actually took back our own shipping rates so that we can actually be in control of auditing the shipping rates. And that was a big one for us. That was really hurting our profitability because we weren't getting the granularity that we needed to get surgical and understand what's being dimmed out. Why are we losing money on this SKU? Maybe this is an oversized item, and also auditing those reports in a big way and making sure that we're positioning those items across the country where we're minimizing the shipping fees.
Yeah, that's a great point, Chad. You know, a lot of people miss that too in the 3PL, right? So working with a 3PL that has multiple locations is beneficial because they can move your inventory to the West Coast and in theory ship to the West Coast a lot cheaper than having your 3PL in, let's say, New Jersey or Pennsylvania and shipping it all the way to the West Coast.
Yeah, and actually that's a great segue into this screen right here. If you look at the way that the map is divided, this is actually what I've done is I've positioned myself with a 3PL on the East Coast and a 3PL on the West Coast. Actually, not even the West Coast. I have a 3PL in Mexico for Section 321. There's a lot of benefits around taxes there, but we positioned our inventory. We did an analysis of what percentage of clients are coming from each state, where are we shipping out of, and where do we position our items where we're essentially minimizing those shipping fees, and we've been able to save roughly about 30%, which is pretty awesome, you know, especially a low margin commodity business.
Mm-hmm. Okay.
All right. So let's talk about another mistake here is these sales channel fees.
Yeah, I can't imagine how many times I've run into this where I will get a new client and they are recording Amazon sales based on the money that arrived from Amazon in their bank. And you would think that's how people do it just in the beginning, but actually you will see it, people who are over $1 million in revenues who might be using bookkeepers, let's say overseas, who don't understand accrual-based bookkeeping and accounting are still booking them net cash received. And as most of you probably know, what you're supposed to do is get the reports from Amazon, and in some cases that can be connected directly to your software for the payouts, gross to net, book all your gross revenues, book all of your net fees to Amazon, returns, refunds, so forth and so on, and netting all the way down to the cash that was received. And not only that, but understanding what period of time that money was for. So if the money comes in, let's say 4 days into May, but all of that was for sales that occurred in April, that entire amount of sales belongs in April's books, not May's books when the money arrived. Again, another accrual-based item. We actually found, believe it or not, in some cases, Amazon will lend money to some e-commerce people, as probably someone that this call are aware of. And when Amazon takes back payments for their loans, they'll net it right into that exact payouts calculation. So if you miss that, you're booking a net item as a sale, you miss the entire repayment of the loan as well. So you have to know those reports.
Yeah, and let's be real. I mean, sure, you've done this for a lot of other clients. This was a huge mistake that we made, I think, crucial, where you recalibrated what we were booking for revenue. First of all, it was happening in the wrong months, but we were booking net revenue. And it's not a true picture of what our true margins we're looking at, like our margin profile. And certainly, by the way, if you're looking to even sell a business, by booking the wrong revenue just throws off the numbers that you're generating and what that acquisition multiple may look like if you're booking the wrong revenue.
Yeah. And what I'll say is, that's a great segue point for a second there, Chad, is a lot of times I'll say to clients, know your margins, even on an average basis, what you think the margin of the business margin should be across all of your SKU line. Because when you pull your reports at the end of a month or a quarter or a year, when you close it and you check your margins, if it doesn't make sense compared to what your true margin is, that's a quick indicator that something's wrong with either your inventory valuation or how you're booking sales. The reason that's really important, like Chad said, is imagine going because you want to go sell your business and telling somebody, I do X number of dollars in sales and my margin is Y. You give them your books and all of a sudden it doesn't say that. immediately you're going to have a problem with those people trusting the information that you're providing them.
And I think one more doozy to add to it is big risk, not filing sales taxes and not doing your sales taxes appropriately on a state level. I know that there's been audits that have happened of companies that were about to be acquired or going through an audit, and suddenly they were like, wait a minute, you're not filing sales tax? And they have all this owed sales tax state by state, which just messed up the entire deal and also just messed up their books and also the cash that was in their bank because they had all these payments that needed to be made. I'm sure you've seen that, Andrew. If you can talk on that, that'd be great.
Yeah. You know, it's so funny. The problem with the sales tax is the enforcement's just not in any of the business owners' face. If you want to go figure out what's going on, you have to go seek it out. Very lightly is it in our face. There are some states like California that are right in our face, and there are other states that don't even mention to you until it's too late that you had sales tax responsibilities. As most people here know, the rules changed in 2018, and now you could be required to file sales tax based on the amount of sales you do in a state, even if you don't have nexus in that state anymore. So we normally suggest, if you're over $1 million, to have an audit done by a qualified professional to verify your state responsibilities. And if anybody wants to know, you can just put in the chat line that you want to know, and we'll give you a connection to somebody here that we know in the country that can do that for you. You have to be careful of what your sales tax platform says is your responsibility. I've seen some of these platforms out there that are VC owned, and I look at them and I cringe because I think that some of those kind of make it sound like they're going to be responsible in the case of an audit, but I don't really think they are responsible in the case if your business was ever audited, despite what it says in some of their dashboards. The rules are different in almost every state. And the big key here, Shopify, which is everybody knows is the largest platform for most website e-commerce sellers, is a manual setup of sales tax and extremely complicated, which is probably one of the reasons why a lot of people don't go through the process. As an example, we actually went through one with a client of ours who was doing a large amount of e-commerce sales, about $30 million a year. And we found that one of the things they were selling was chocolate. And interestingly enough, chocolate is sales taxable in certain states, in other states it's not, and it depends on the flour content. So we had to dig down to the state level to determine exactly whether or not this chocolate was taxable and then turn it on in Shopify. That's how complicated it can get.
Wow.
The other thing I just want to call attention to outside of sales tax, it's not my favorite topic, is just the profitability reports in Skubana. So one of the things that we do is we pull in our 3PL shipping fees into our SKU profitability report. So we could see, that's how we were identify early on this year of what SKUs we were making money and what SKUs we were losing money on, and really just asking the question of why. And that's what caused us to take over our own shipping account, because we were losing control of that. We wanted to properly route the orders to the right warehouse using our own shipping. By the way, we were getting credit card points on it as well, but we wanted to make sure that we weren't being overcharged and items were being dimmed out. So that's a little pro tip that maybe others don't know that are on the call that are Skubana customers. Biggest mistake, in my opinion, just in business in general, but specifically around e-commerce merchants, is just guessing. And to take the statement from Andrew, he's like, you got to know it to grow it. And I was like, or you'll blow it. We added that to the deck. So Andrew, why don't you go through it a little bit for us, what you've seen from a pricing perspective, margin, profit perspective as well.
Yeah, I just do a real quick commercial in my industry. Not all accountants are created equal. It's just the way it is. Believe it or not, despite the fact that most accountants will say they can do certain things, there are some of their tax accountants, some are auditors, and some are business advisors. What we suggest to do is that you understand the business you're working in, put a plan together to be able to get that client's books to a point where they make sense from the perspective of what they actually think the business is doing. We call that a mutual success plan. Once we do that, we restructure the books in a way that the reports are understandable so we can speak to the client about what's going on, and then also develop the what happened to the cash report. What that does is it forces us to close the books on a regular basis, either quarterly and in some cases monthly. And what that does is we pause, have conversations, discuss what happened, what is happening, and what we think will happen so we can reset plans. And I think that all that comes down to, in the end, with e-commerce based business, 50 to 70% of this always comes down to inventory valuation and gross margins. Almost all of my conversations come back to the same thing. Your profit is X. Why is that? Oh, the margin looks wrong. We need to go back and figure out what happened with your inventory valuation. So we suggest everybody reconcile and hard close your books at least monthly if you're doing $1 million a year, but definitely no less than quarterly. And then pause, review them, figure out if it makes sense, and work with the right accountant who can help you understand what the reports mean.
All right, now this is the big one. And I think this is a great transition into the QuickBooks connector that we just built. Our engineering team, along with Andrew, you've given us a lot of support around building the proper connection. So a lot of individuals on our platform have been doing it manually for a very long time, including myself. And when I say manually, I wasn't doing it, but we had Andrew's team doing it, transferring over data. We were paying by the hour for it. It was baked into our retainer. And we tried using many other softwares in our app store to help transition data into QuickBooks. And most of them, actually, no, all of them had just straight up failed. A lot of them overpromised and under-delivered. And we started building this ourselves. So I think that's a great transition to Sam, who's super comfortable. There's those that are on the call right now that are going through the onboard process. For those that aren't going through the onboard process right now, there is a bonus at the end for you where you'll get hooked up with a special deal that we have because, like, given what's happening in the current climate in the world, I think it's a great time to double down and find those inefficiencies in your business and figure out what you can automate. So without further ado, I'd like Sam and Andrew to both tag team this. So to take it home.
Super. Thank you, Chad. Yeah. So to introduce all of you to the connector itself, what it is, what it does, why it's useful, why you need it. Here's a brief overview. So, of course, Skubana in your workflow is the hub for all of the warehouses that you're dealing with, all of the sales channels. Everything comes together in Skubana. So that's a lot of your data. That's your hub or source of truth, in other words. And for most folks, if you're not already using a connector for a different accounting platform, a lot of the work required is manual. And naturally, there's room for error. So Andrew, I'm sure that you see this all the time with folks you work with, that certain things can be overlooked or forgotten. And there's just a lot of manual effort that's required to remember everything that needs to be done.
Yeah, I'll just jump in here and say, what we do is we close our clients' books mostly on a monthly basis, and we pull reports from Skubana in order to record in the accounting software the inventory valuations at different stages, whether it's in transit or it's inventory that's actually in specific warehouses. So that means that the books of that client are right one day a month, or 12 times a year, the books are right. The rest of the month, they are not accurate because inventory is only updated at the end of the month. So what we've been talking about doing is having a transition where Skubana could dump information directly into the software on an automated basis so that the books can be accurate on at least a daily basis.
Yeah.
And what we're doing right now is doing batch transactions on a daily basis into Chad's crucial software to automate the inventory valuation update. So now they are correct daily as opposed to only once a month.
Yeah. And even with that window of within that one day each month that you're recording the inventory, units are selling. So there's always a little room for, yeah. Okay.
Yep. And the cool thing is you could do, it depends on, you know, if you're on the call and you like to use QuickBooks to do everything, you could have detailed transactions come over from Skubana, detailed all the way to who the sale was with, I mean, what sales platform. You could, down to the inventory unit that went in or out. We typically batch it in daily. The reason I do that is because we usually use Skubana. We ask our clients to use Skubana to do analysis of their businesses. QuickBooks is just a summary platform, and if there was a mistake in any way, it would be hard to remove hundreds or thousands of transactions. So we really want to be able to remove one transaction a day, which is the batch transaction. So we're one day.
Okay, that's a great, yeah, that's good to know. Thank you. Yeah, so as Andrew said, ultimately, This automates the effort of updating your accounting data on a monthly basis, but even sooner than that, you can have Skubana push data to the connector daily. So what does that mean? The connector, ultimately, this is how the data flows. So the connector is integrated with Skubana in both Skubana and QuickBooks. Any event that occurs in Skubana, so you see here order data, anything related to purchases, inventory, or fees, that triggers something to occur in Skubana, so then there's new data created. All of that data then flows to the connector, GothamWorks. And within the connector, you have your configured settings. So all of the data will be formatted in the way that you need and will be pushed to QuickBooks in the right time cadence that you need. The format related to the dates, the way that you date journal entries or whatever type of entry you use. And all that data will be sent to the specific accounts that you need specific pieces of data to flow to.
Mm-hmm. Yeah, so unlike certain apps, sorry, Sam, to interrupt. Unlike certain apps that you might find in Intuit's QuickBooks' online app store, where you can download an app and then that connectors directly with the software that you're using, GothamWorks is actually the piece where you're going to actually make your notations, where it's going to connect the Skubana information or designations with the QBO designations. It'll match up certain things and then flow into QBO. So you're actually not using an app that's built into Skubana. We're using, as Sam said, a bridge connector from Skubana, right, which translates the information between the two softwares.
Yeah, that's a good distinction. Thank you. Yeah, so the connector itself is on its own server. So that data is held separately as a bridge, as Andrew said. So it's not something that would be visible in your Skubana account, but it's all the same data that is in your Skubana account flowing over. So once the data enters the connector and is configured according to your settings, it enters these accounts, whatever account that you use as you've set up your connector. And then that begs the question, why do you need this connector? What would this do for your team? How would this save you time? Ultimately, it's removing all the manual efforts that your team is contributing toward anything financial or accounting related. So the process of setting up the connector is actually pretty quick. We have our whole customer success team dedicated to implementing the connector for anyone who's ready to take it on. So you'd have a designated implementation manager for that process. And that specialist would then set up the accounts with you and all of the mappings. Mm-hmm. So here in this screenshot, you can see this is the connector. And you can see how for each sales channel, you have different accounts mapped, and you can determine on a very granular basis how you want the data fed into QuickBooks from Skubana.
Hey, Sam, can I interrupt you here for a second? So one of the things I think is important here as a distinction is, since I'm an accountant and I have clean books, my concern here is what happens if I connect this thing and all of a sudden I don't have clean books any longer? And a lot of outside accountants will feel that way, and a lot of CFOs and controllers are going to feel that way. And the reason, so what I basically said to Skubana is, I highly suggest an accountant be involved when this connection is made, because there are considerations here such as, what about cash as it relates to sales? And will it pick up the cash that is already going to come in with my connection to QBO, for example, that I already have my Shopify connected and my cash comes in that way? Or maybe it's going to come in because I'm going to have my bank connected. So there's a lot of considerations here that have to be decided about what you want to have come over. So it can be, as like Sam said, as high as you could be just do inventory valuation, but probably you want cost of goods sold. You may or may not want sales because you might have sales coming from a different location, but you might want it and then turn off the other location. Cash is also another consideration too. So you have to be sure an accountant is involved when you're working on this this connection to make sure it works right.
That's a great point. I know that at Skubana we have companies of every shape and color, and certain companies folks are handling books themselves internally and may not be working directly with an accountant. But with a connector like this, it really levels you up in terms of the capabilities of manipulating your data in a more granular way than you typically would if you were just starting out with QBO handling it on your own. So that's a really great point. And as you mentioned before, you have, if folks want to comment in the chat box, we can connect you with accountants or anyone else that you would need to help you handle this and dive in further. So another great point that you made was that with the connector, you can control exactly what data is pushed and also block data that you don't want pushed. So for example, we do have some customers who only want to send specific types of data, like only one specific sales channel needs to push data to QuickBooks, or cost of goods sold alone, for example. So in terms of the configuration abilities, really you can handle your data and manipulate the transfer of it in any way that you'd like.
Mm-hmm.
The screenshot is another example of how in the connector you can adjust your settings as you need. There are granular settings by warehouse, sales channel, etc. So on every level, everything is configurable. Mm-hmm. Naturally, every workflow is different. So Andrew, you could speak to this. Every company has different accounting needs. If you're working with international taxes, for example, and want to block those, there are different needs of the company. So
what we did is when we connected Crucial, Chad's company's books to Skubana, is we decided we didn't want to make changes to any of the existing categories that we really knew were correct and we were using in the old manual method. So what we did is we created new categories that we knew were specifically related to this connection and set up what I would call dummy accounts. And we had the information flow into those dummy accounts, and we A/B tested throughout this process on a daily basis until we could see the balance get to a point where it was going to match with the Skubana reports. But we never allowed it to hit the manual information that we knew was accurate from the prior month's close, because I was afraid that we would have to go back and clean it up. And worst case scenario in the situation we did is we would just delete the accounts or inactivate the accounts that we set up.
Okay, that's great. Yeah. Yeah, with some of the demos I've given on the connector, I know that some customers want to import historical data from Skubana, and others want to just start fresh, as you mentioned, just starting from this point forward, keeping last month's books closed. So that, I think, is a really good question for an accountant or whoever's handling your finances.
And just real quickly, Sam, again, this is not a commercial. I just want to make sure it's clear. If your accountant doesn't know, you need to go find somebody who does know. It's extremely important, because I would never suggest to Skubana that if connection doesn't work, and it's because we didn't have an accountant involved, that it was Skubana's fault it didn't work. They're just pushing data into a bridge. It's really our responsibility to make sure that we know where we want that bridge to go. And a lot of that really comes down to having an accountant understanding the books and knowing what to do with it. So make sure you're working with somebody who knows what they're doing.
Yeah, that's a great point. So in terms of the ways that the connector will allow you to record data, this is also configurable, and Andrew touched on this before. The connector can support transactional and batched receipts, journal entries, etc. So as he was explaining, if you want to explain some more, the batched method can be a little safer or cleaner in terms of backtracking and verifying past data.
Yeah, it's probably a pet peeve of mine, but I was dead set against having any detailed transactions go into the file. We actually were a user of the first bridge that Skubana set up way back when. I think it was about 3 years ago. And as Chad said, it was a really big mess. And I will not forget, the look on the face that my bookkeeper gave me when she saw what happened to the books after we set it up, and I'll never let that happen again. So we allowed detailed transactions to go in. It was for somebody who was doing about 500 to 1,000 transactions a day, and it was a big problem. So I'm a big believer in batch transactions, and then the ability to go back and find out what was in the batch within the bridge or software. And that way I can just delete or change the batch in QBO very, very easily. So we like the 1 time a day batch roll up of transactions, putting into QBO one transaction. I should say one transaction once a day. It could be multiple transactions, but once a day for batching.
Yeah, that's great. And as you can see in the screenshot, for the tracking interval, that can be adjusted hourly, daily, weekly. So daily as possible, hourly, for good accountability. So in terms of the automatic sync, automatic push, naturally, we all know with Skubana's order bots and other functionality, a lot of Skubana's help in terms of your day-to-day is automating your low-value tasks that you shouldn't have to deal with manually, such as splitting orders, merging orders, routing your orders to the correct warehouse, and in turn, that all lowers your overhead. So the purpose of this connector is to do the same thing, to streamline your operations, streamline the process of closing your books every month, and to have everything done manually, or automated, not manually, to alleviate the manual effort. So your sales orders, purchase order information, channel fees, etc. Even if some of these items don't necessarily apply to your specific workflow, everything can be accounted for. So there's really no area left untouched. In other words.
And I think it's probably everybody's opinion. It's kind of like getting a brand new iPhone, right? You turn everything on the phone and then you try and figure out how to use it. This is one of those scenarios where it's a little scary to do that. Again, it's probably because I'm an accountant at heart, and I feel like making sure it's right is more important than all the features being turned on. I like to turn them on one at a time. So I'm like, all right, that works, great. Now let's move on and let's break out all the sales by channel. Great, that works. Now let's turn on this feature. And what that basically does is a rolling turn on until to make sure it works, because if you turn them all on at once, it might be hard to know what was going wrong if it's not working. So yeah. I'm not a big fan of that.
I think that's a great method, step by step. Yeah, I think that's a great way to start turning everything on. In terms of the pieces of data, we briefly touched on this before, but to get a little more specific, these are the data types that Skubana is pushing over to QuickBooks, or can push over to QuickBooks. We have a very detailed document on all of the technical specs of the connector. So this is a very abbreviated version, but just to give an overview of the type of data that exists and what will trigger it to be pushed to QBO. So self-explanatory. If a return is created, then that information is then pushed to the connector, which pushes to QuickBooks. So any event that occurs can then be pushed to QuickBooks to create the proper entries. If anyone has questions about this slide also, please feel free to ask. There's a lot more to be explained in terms of the data that can be pushed and how we push it. So we'd be happy to send you the technical specs later as well. Now, what Chad mentioned, bonus time. So in terms of what is a great benefit for all of you as Skubana users, there are two great offers that Andrew and Chad are happy to announce. So the first offer is typically the QuickBooks implementation comes at a cost, but right now we're offering free implementation of the connector. So feel free to get in contact with your account manager or support@skubana.com. Likewise, if you'd like to have a demo of the connector and you haven't yet, feel free to reach out to your account manager or support, and we'd be happy to set up a time to demo you. And then for Andrew.
Yeah, so basically what I'm offering is If anybody would like a free consultation with me on the phone and or for me to take a look at their books to give them an opinion from an accrual to cash perspective, or anything that might be questionable, I'd be more than happy to do that. What I would also add in is when we have clients and we work with them, we don't charge our clients for helping them with an implementation like this for Skubana as well. So I would say I would offer free implementation, but that only goes with people who are my existing clients. But we do handle that for almost every one of our clients as necessary without charging for it too. But if there's somebody on this call that doesn't work with me or doesn't know what the difference is between their accountant or us, be more than happy to speak on the phone or via email, text, Zoom, any way you want for 30 minutes.
Awesome. So to recap, what's the point of all of this? Why automate this? Why look further into the way that you're handling your accounting and your books?
Mm-hmm.
Andrew, do you want to take it from here?
Yeah, of course. So as I mentioned before, we're big on reconciling and closing books monthly and or quarterly, and especially on an accrual basis. The reason why is we want to be able to pause, understand what happened, what is happening, and what will happen in order to discuss with the client some strategy about whether or not we should go take on that new marketing opportunity, or maybe we should hire somebody, or maybe even pay myself more money. So we want the largest item to be accurate as possible, as often as possible. And in an e-commerce multi-channel business, that is inventory, which is why inventory connection on an automated basis makes so much sense. And if it's connected and automated and your books can be accurate throughout the month, then you can sit down and pause at any point in time instead of just at the end of the month when you close. In any cases, this is all about being able to grow it and know it in order not to blow it, like Chad said. And that is to be able to make the right strategic decisions based on the right information. And the only way to know for sure if it's correct is being accrual-based accounting and closing on a regular basis.
That's a great point. A really important note to add, which is another huge step in the accounting realm on Skubana's end. So most of our customers know about this new feature already because it's been on the platform, and I know that most of the customers that I work with are already using it. Our reconciliation tool, not to be confused with general reconciling your books and your sales data, but the reconciliation of your inventory. That new feature in the inventory module was made specifically for accounting purposes to help all of our customers control their inventory value. Mm-hmm. So naturally, when you receive on a PO, your inventory value is created with your landed cost, but anyone has to add errant units manually for whatever reason. There's a million use cases. Mm-hmm. So anytime units are adjusted in your inventory, you may not have an inventory value attached, but now with this tool, you're able to control that value to control your COGS. Mm-hmm. And that's something that I think is important to keep up on more frequently than monthly even, depending on how often you're receiving an inventory or adjusting. So yeah, with that too, just another Skubana tool that we've rolled out recently that's to your point that data is king and you have to keep everything as clean as possible so that you can fully rely on it moving forward.
Yeah, let's be real. I'd already mentioned that I was part of the QBO software building back 5 years ago. And the #1 item that was discussed that long ago was, when was QBO going to get inventory up and running? And they never did. It's never worked. It's an awful program and everybody knows it. The reality of the situation, there's probably nobody on this call that doesn't agree that inventory should be attached to their QBO and attached to their QBO or software on a regular basis. The big concern in here is it going to work? And that there's nobody here I think we need to convince that this has to happen and should happen, because it's been discussed ad nauseum for at least 5+ years. And this is something our industry, my industry, has been waiting and begging for a long time.
Yeah. Yeah. I think the limitation I know about, the primary one, is that the inventory is controlled only, or inventory can only be tracked if it's a single warehouse. So if you have multiple locations, you're at a complete loss.
Yep, exactly.
All right. So to recap, Andrew, take it away.
Yeah. So you want to know cash versus accrual, cash in the early stages of business, and then move to accrual. I suggest by $1 million in gross revenues, you should be on an accrual basis. I normally put all my clients on an accrual basis day one. And a lot of them think it's painful, but I like it because I can then tell them on a performance basis exactly what's going on in their business. So cash versus accrual, extremely important. Don't lose track of your cash. So being able to record where your inventory is, that goes along with 2 and 3 go together. Recording your in-transit inventory and recording your inventory valuation at all the right points, making sure that your books are accrual basis will help you understand where your cash is and be able to then help you understand and make the right strategic decisions. As I mentioned on this, I do a report called What Happened to the Cash Report, which helps reconcile accrual to cash. Well, I think is a helpful tool to bridge the gap for our clients. Don't forget your 3PL costs vary. Not only is it when they bill you, but where they're located in the country could be a big issue for their shipping costs. Don't forget that 3PLs can audit your counts. They probably will say they cannot, but understanding whether or not your valuation is right or not is important. I suggest asking them the cycle count, if not at least shut down and count once a year. Understanding your margin, extremely important. It is the number one thing that I hear when I talk about my clients' books when we have a closed period is my margin is X. I thought it was Y. Why is it wrong? And understanding your margin and knowing what you think your margin in your business is going to be is really important. For example, I have a client that I know knows, for example, that his margins usually run between 20 and 24%. So when the margin is in that range, we're good. But imagine pulling a report and finding a margin that shows all of a sudden 7, or the other way, 40. We know something's wrong. Don't play guessing games. That means close your books monthly and or quarterly, and then use that to help you make the right strategic decisions. Manual data entry. Obviously, this is all about the connector, the Skubana inventory connector, which we think it helps automate the process and certainly helps you have your books accurate on a more regular basis than monthly or quarterly. And again, I want to stick to that point, right? Anybody who closes their books once a year to give their accountant, and their accountant doesn't do anything but accept their books, that means the books could be completely wrong. If the accountant actually does work, that means it's right once a year. If you do it quarterly, they're right 4 times a year. If they do it every month, they're only right 12 times a year. If you connect things automatedly and start to reconcile, put all your transactions in daily, it can be right every day of the year, which obviously is really important for a growing business. And then the last one, Sam, you can go ahead and obviously take that away about the connector.
Yeah. So ultimately, the more processes are automated, the less room there is for human error. Plus, that gives you so much of your own time back and your teams to work on other projects. So ultimately, the connector not only ensures accuracy, but it also ensures that you have more time for the things that actually matter. And that, coupled with the reconciliation tool for inventory, just further solidifies the fact that everything can be handled by computers, and this connector will streamline everything in the way that originally I think everybody hoped it would be for accounting.
And work with an accountant that knows what they're doing in order to help Skubana help you. I mean, that's really what it comes down to. They are not accountants. So you need an accountant who can help them help you.
Yeah, that's a great point. Yeah. Even if it's just one conversation to start and to get things going.
Yep.
Yeah. All right. So I know I see some questions have come in. we will keep getting back to these. So everyone, please feel free to send any other questions you have in mind. We can also share.
It's Gina. I was thinking maybe it would be a great idea to read some of the questions that we've answered already. If anybody else has any questions, add them. In about 5 minutes, the replay will also start to play once we've stopped the webinar, but the questions tab will be live. So if you want to add any questions between now and any time in the future, we will be able to respond to those directly, and also have your account manager and the support team reach out with any further details. So just wanted to put that in there. Yeah, we have some great questions coming in. So Andrew, if you want to pick some out, we have some answers already in line, but if you want to elaborate, that would be extremely helpful.
Any of them in particular, or
do we have any that are accounting?
I was walking through and answering some of them as best as I could see. Somebody had a really good question, and it happened to come up at the same time we were talking about it, is what happens if I have a different function connected to my file and it already brings the cash and their sales in? And then I answered it, and I saw that Gina answered it as well too, which is absolutely right, that you can configure the program so that it does not duplicate the transactions. And again, I think this comes down to working with an accountant to make sure that it's set up correctly, because it probably will come through incorrectly 1 or 2 times, and fixing it after that fact is really easy to do. But yes, you can absolutely make sure that it only syncs what you want it to sync and doesn't duplicate the information. Very, very important question that was asked by Erin back 24 minutes ago. I
think another one that came up, and it also kind of plays off one of the mistakes around 3PLs, is a little bit on how Skubana associates 3PL costs with specific orders. And after running it by some of our developers and our customer success team, we actually found out that 3PLs costs are divided equally on an order per order basis. Samantha, do you want to elaborate on that a bit?
Yeah, so I think in terms of fees per order, that's pretty straightforward with 3PLs. If there were other fees from the 3PL that you wanted to be included on an order level, then that wouldn't be entered into Skubana directly, so that would have to be manually handled and entered into QBO. If the data were already entered, if the data existed on the orders in Skubana, then it could be transferred over automatically. But typically the 3PL will be billing separately, and those charges wouldn't appear on any orders in Skubana. So the data that's pushing through the connector is only the data that exists in Skubana from the connected bodies, but through which if there's billing appearing on Skubana, if you see those values on Skubana, then they can be pushed. But otherwise, for external charges and bills that are not appearing in Skubana, then that wouldn't be possible. That's different from Amazon though, because Amazon fees do appear, and those are transferred over.
Mm-hmm.
I think Mark Riskowitz's question about the date, like say you have an order that comes in on the last day of the month, but it's not shipped out until the next month on the 1st or 2nd. How do you account for that? Or say it's that small window between, it's like midnight, the last day of the year, and the order ships out a few hours later. How do you handle between those 2 months, the reporting? So for any event that occurs in Skubana, you can choose how you want the dates to be accounted for, to have everything be handled in a uniform way. So the date selections, really there are a ton. There for each event in Skubana, you can choose from a whole host of different dating options. For example, the moment at which the order was created, the moment that the order was shipped. So depending on how you want to handle the deferred revenue, as you mentioned, Mark, that can be configured in the connector. So that's on a workflow or company by company basis. And that's certainly accounted for, in other words. Let's see.
I didn't see any other ones that didn't look like they were answered specifically. I think I see one in there that I can't answer. It's related directly to the Skubana software. I don't see any other accounting-based ones yet. So I don't think I have any others that I can answer unless somebody else has a question that was not already answered or asked.
Yeah. Yeah, I think everything was covered.
That's great. So, and actually we're just past the hour. Again, if anybody has any questions, you can add questions. This webinar will be up in perpetuity. And thank you everyone for joining. We're really excited to kick off this customer-focused webinar series. And as always, we hope that you can give us feedback, share with your AMs, share with the support team what you'd like to learn more on in terms of Skubana functionality or the functionality of some of our partner connectors. We'd love to create more content for you and engage with you on this deeper real-time level. So everyone stay safe. Thank you so much, Andrew, for joining, and Samantha as well for your expertise and, your can-do attitude with stepping in here last minute and, helping us share this new connector. So everyone, thank you for joining, and we'll all hope to see you again soon.
Thank you, Gina.